Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Coming up on the show today, Kenyan government partners with private sector development partners to outline roadmap to achieve energy efficiency goals. Cameroon seeks to build $3 billion dam to export electricity. And South Africa Reserve Bank keeps interest rates unchanged at 3.5%. We'll begin the show with intraday market numbers from Africa, which were mixed. South Africa's JSE index was in the red, 0.09%, and Nigeria's main index rebounded to trade high at 0.07% as at midday. The market in Egypt ended the week negative by 0.34% on Thursday. Kenya closed negative also on Thursday. And major markets in the Middle East closed the week positive on Thursday. In the UAE, Dubai's index gained the most by 0.86%, while the Abu Dhabi index added 0.12%. Elsewhere in the region, Saudi Arabia's index advanced 0.32%, while the Qatari index was marginally higher by 0.01%. In Europe, stocks were mixed on Friday morning as investors monitor the rise in coronavirus cases across the continent and the prospects of economic recovery, along with further declines for U.S. tech giants. Let's talk to Chelsea now for more. Hello, Chelsea. Good afternoon. Well, the number of new coronavirus cases in the UK, France, and Germany have surged and sparked concerns about new restrictions on daily life. Can the European leaders ever be able to get the new outbreaks under control?
Well, these concerns have been building for several weeks now, but they do appear to really be coming to a head now. As you mentioned, we've seen cases really across Europe pick up quite a lot. Here in Germany yesterday, there were reported 2,000 new infections. That's the highest level since April. France has set a new record of cases. The UK is also seeing a surge. Spain, Italy, really a very broad increase in cases across Europe. And this obviously is leading to much more discussion about concrete restrictions that we may be seeing. So today it's really been a stream of new announcements from across Europe of restrictions that we're going to see. So, for example, Denmark has said that they will set a curfew. Nice and France on the French Riviera has banned gatherings larger than 10 people. The UK has discussed shutting down some cities, locking down some cities again, and said they cannot yet rule out a second lockdown. So we really are starting to see these fears over a new wave of infections come to fruition. Obviously, for policymakers, for everyone really, it's very important to keep the economy on track. We saw how devastating these lockdowns were for the global economy earlier this year. So most countries are trying to avoid a broad national lockdown, but we definitely are seeing more of these localized lockdowns and restrictions, things like closing bars, setting curfews. But that's really because economies need things like schools and workplaces to be open. So that's really the focus now.
Meanwhile, new data from the German government shows its official coronavirus tracing app has had limited effectiveness. What is the verdict on these apps as containment tools?
Well, there was a lot of excitement globally about contact tracing apps when they first were being developed earlier this year. And most of them have proved, like the German app, to be only of limited use. So here in Germany, they launched the tracking app in June. They have said they've gotten about 18 million downloads. That's about 20% of the population, but it isn't really being used widely now. They say only about 750,000 people appear to be using the app, and it's only been effective in tracking a very small percentage of coronavirus cases. So for an app like this to really succeed, it needs to be being used by a significant portion of the population, and for various reasons, things like compatibility issues with phones or data concerns about sharing your data with these apps. it does appear that many people aren't using them. And it's not just Germany. France, for example, has only had about 2 million people download their app. The UK didn't even get to release its app at this point. So these certainly aren't the one for all cure that a lot of people had been hoping that they would be.
And the European travel industry has urged governments to put an end to quarantine rules that they say are preventing a rebound in travel. Could governments agree to loosen restrictions?
So for now, governments are sticking to the restrictions that they have in place, especially as we are seeing this wave of coronavirus cases. Many of those new infections are coming from people coming back from vacations, holidaymakers, things like that. So a lot of governments, a lot of politicians still believe that quarantine restrictions, things like that are very much necessary. But these travel industry associations, these airline industry associations are very concerned about the impact that's having. For example, we've seen here in Europe a bit of a rebound over the summer in travel. So things like airfare and demand for airline tickets had started to pick up. Now we really are seeing that come down again. So one airline industry association is predicting that we'll see about 6 million fewer flights this year than last year. That's a much steeper drop than they had initially been expecting. So we are seeing the rebound in travel start to taper off, in part because of this very confusing patchwork of regulations across Europe. So we will have a meeting next week of EU officials who will discuss ways to better coordinate these travel restrictions, because right now it is very different from country by country. So maybe we could see more cohesion among quarantine measures, among travel restrictions, things like that. But I think given the rise in cases, a lot of politicians, a lot of EU leaders are going to be quite hesitant to make it easier to travel throughout Europe right now.
Well, Chelsea, it's been a great week with you, and I guess it's time to say thank God it's Friday. Enjoy the rest of the weekend. And in the UK, the FTSE 100 was down this morning, and one reason for the stock market sell-off in the UK may be the growing prospect of new coronavirus restrictions across the country. Let's see or get an update from my colleague there, Juliana. Good afternoon, Juliana. Well, the hint of a new coronavirus restrictions across the UK dampened investor spirit this morning. It's intraday now. What has changed, particularly as the latest data shows UK retail sales has rebounded back?
Well, the FTSE All-Share is still wallowing in the red. It's down 0.33%. The FTSE 100 is also down 0.22%. And the FTSE 250 is down 0.91%. In currencies, the pound is slightly up against the dollar by just over 0.5%, up on the euro by 0.12%, and down on the Japanese yen by 0.35%. Really, I'll echo the same sentiments that were said just now in Frankfurt. I think the major debate here in the UK is whether or not the entire nation will be going into a second lockdown. It's highly likely. All the signs are there. Cases of positive infections are doubling every single week. Before, I would say at the start of September, at the end of August, there didn't appear to be a major concern because it appeared at that time that the spread was being caused by young people who were not socially distancing, and because they were so young, they weren't going into hospital. But the number of people in hospital is also doubling to numbers that we haven't seen since April or May. Now, some breaking news just before I got in the studio is that northwest of England will be put into lockdown, I believe, either on Monday or Tuesday. Last night it was confirmed that the northeast of England would be put into local lockdown. And there are so many parts of the country that are in local lockdown now that there are suggestions that, of course, it's better for the Prime Minister to put the entire country on lockdown. The only issue Prime Minister Boris Johnson has is, of course, the economy is in tatters. We're in a deep recession, and he's still struggling to get people out to work. It's a delicate balancing act, but according to pretty highly sources, highly connected sources, the chief scientific medical advisor was with Boris Johnson on Wednesday evening, and he has suggested a 2-week lockdown is what this country needs to go to. So I suspect we'll be talking about that next week, Chimezie.
Absolutely. It's really not a good time for the UK. Anyway, the London Stock Exchange Group is getting closer to selling the main Italian bourse to French rival Euronext. Any details about this deal?
Well, not much detail, but we know that the LSE, they do own the Italian Stock Exchange. I believe it's valued at about 3 billion euros. There are several keen markets that are interested in buying that, and it appears as if Euronext, the Paris firm, are going to be the closest into purchasing it. And really, what the London Stock Exchange are trying to do is to shore up their merger, their $24 billion blockbuster merger with Refinitiv, which is a trader data and analytics source. This sale has been going on for about a year. I believe I was talking about this with you last year, actually, Chimezie. But as soon as they said they wanted to merge with Refinitiv, lots of European regulators and, in fact, global regulators got involved, including the US Department of Justice. Now, the US Department of Justice has closed the antitrust regulation process that was going on with Refinitiv and the London Stock Exchange. They seem to have given it the thumbs up, but the London Stock Exchange needs to sell parts of its business to get the go-ahead from European regulators, and the Italian bourse, as you said, is one of those, and Euronext seem to be up for the bid. So it's 3 billion euros, and we'll see next week whether or not this goes through.
And it's the last trading day for the week. How would you describe the week that is about to end, and what is next week looking like?
Well, it's been a busy week here in Britain. Certainly a busy week for Prime Minister Boris Johnson. Lots of whisperings that Prime Minister Boris Johnson may even be in trouble. Yes, he has got an 80-seat majority, but it's been a tough year for him. It's been a tough year for every leader. It's been a tough year for all individuals, but particularly for Britain, because in the West, Britain has fared the worst when it comes to COVID-19, not just in how it's battered the economy, but in the amount of deaths. It's very cold here, and we've got a second wave definitely on the climb. Brexit had been at the back of discussions for months on end, but this week, of course, it was right back in the spotlight as the Prime Minister admitted that he was willing to break international law to get an internal market bill through to the Commons. This has upset not just Europe, not just people in the Conservative Party, it's also upset America. So that seems to dominate. Well, that was dominating on Monday and Tuesday, but now that there are serious talks about a second wave, it's particularly serious here in Britain, because we know that from Monday morning that 700,000 people have lost their jobs since the pandemic has started. We've got the furlough scheme coming to an end at the end of October. It's supported almost 10 million people. It's still supporting 5 million people. These people are very unlikely to get hired back from their bosses. So it's a mixture of many things. I would like to say it's COVID that's dominating, but of course it's Brexit too. And these discussions are only likely to increase next week when the second reading of the Brexit controversial internal bill goes once again in front of lawmakers here in Britain.
Boris Johnson really has a lot to deal with. Thank you very much for those updates, Juliana. Enjoy the rest of the weekend. All right, we'll take a break now, and when we come back, of course, we'll look at how COVID-19 has accelerated the digital adoption across Africa. These and more in a moment. The Kenyan government, through the Ministry of Energy, has launched the Kenyan National Energy Efficiency and Conservation Strategy, placing Kenya firmly on track towards sustainable consumption and production, including renewable energy generation. The strategy was developed in collaboration with key stakeholders, including the Kenya Association of Manufacturers, with support from the World Bank and the United Nations Environment Programme. The strategy now seeks to guide the country further towards achieving its established energy efficiency goals, which include include reducing the national energy intensity by 2.8% per year and enabling the country achieve a 30% greenhouse gas emission reduction by 2030. And Cameroon will build a $3 billion hydropower plant as part of an ambitious plan to make the Central African nation an exporter of electricity by 2035. The 810-megawatt Grand Ewang project, which is a joint venture between the government and the US-based energy company Hydromine Incorporated, is the fifth hydro project on the river. The Vice President of Development and Operations at Hydromine Incorporated, Lucas Brigger, says the new installation will start generating power by 2028 and capacity will increase to over 1 gigawatt several years after that. And the Monetary Policy Committee of the South African Reserve Bank kept repo rate unchanged at 3.5%, and the bank governor says the SARB anticipates no further repo rate cuts in the near term, but foresees 2 rate increases in the third and fourth quarters of 2021. This is the first time the SARB has not decreased the repo rate since the advent of COVID-19 in the country in March, when the MPC cut the repo rate by 100 basis and a second 100 basis points cut was announced in April. And the implications of the COVID-19 pandemic have accelerated digital adoption as the increasing use of technology to work, play, and stay connected have shaped new digital habits. Online became the default purchasing channel for many consumers during lockdown. But while e-commerce has accelerated in adoption, retail isn't the only area that has become more digitally focused for consumers throughout lockdown. Well, joining me now to drill down on this is Ted George, the Chief Narrative Officer at Clio's Advisory. Thank you very much, Ted, for joining us on the program.
It's a pleasure to be back.
Our COVID-19 has accelerated digital adoption across Africa with a surge in digital payments and mobile ownership. How has Africa's commodity value chain been affected?
Well, I think what's so interesting about COVID is it's dragged in a lot of the laggards when it came to digitalization. If you go back only a year and you were trying to, in West Africa, get someone to do a Zoom call or exchange a document digitally, it was very difficult. Nowadays, everyone can do it, even though we have maybe a bit far to go with some countries. And so I think it just shows one of the main blockages to digital is actually mental, not technical. I think in the value chain, when you look at all of the commodities flowing out of Africa, what's happened to the general economy, more people using digital payments, using mobile phones, that's happening in the value chain. Everyone from the farmer to the processor, the transporter, the dock worker, everyone is using mobile phones and WhatsApp groups and social media to transact. And that is really basically changing the way that we do business. No one is going to want to go back to the old ways when this is all over.
Absolutely. Well, blockchain has been hyped as an ideal technology for trade and commodities, but is it really needed in West Africa?
Well, I think that's a good point. I mean, blockchain is very overhyped, and it is an expensive technology. Essentially, it's a database, but it's a database unlike no other because it cannot be hacked. And if you want to change it, you can only change it with the agreement of all the key parties. So it's perfect for exchanging trust. You don't need it for everything, but where there's a real opportunity, and I'm seeing it expand in Africa, is things like identity. Your identity. If you want to prove who you are, whether it's your passport, your education record, your credit history, your health record. If all of that information could be stored on the blockchain, it just really means everything about the kind of business that can be done can speed up. And obviously for commodities, we're talking cross-border payments. Why is it a Nigerian company has to buy dollars so it can buy something from South Africa? If they could be transacting via the blockchain between trusted parties, it could be practically free. So there are many uses for blockchain, but it's not a panacea for everything.
Our regulation is often cited as a blockage to the adoption of new technologies in Africa. How open are African regulators to digital innovation?
Well, I think it really depends where you look on the continent. I mean, certainly the leaders in innovation always seem to be South Africa and Kenya, and to a certain extent Rwanda. But we've seen Egypt and also Nigeria really opening up to the idea of innovation. And in the case of Nigeria, you can understand why the central bank is open to it. There is such a shortage of US dollars, such pressure on the Naira, that any kind of technical solution can help trade to flow is welcome. But I also noticed the CBN has recently set up a sandbox and has a number of payment companies in there as well. And it really is focused on international payment settlement. So there is openness, but there needs to be a lot more interaction between regulators and innovators so they can both understand each other.
And how do you see the future of tech in Africa?
Well, trade tech as a name is quite a catch-all term. I mean, that's all the technologies used in trade. So anything from a mobile phone to blockchain, AML, artificial intelligence. For me, the thing is that nearly all Africans have a mobile phone now, over half of them. Most people have a 3G connection as well. All these people in the value chain can be connected. So you can have information about the goods and the places that they're in the whole way along the value chain. If you crunch this properly, you can basically get finance farther, you can ensure people pay more fairly, and perhaps most importantly, you can actually cut the biggest loss that you get in trade, which is always fraud.
Right, thanks, Ted, for your time on the show. Thank you. Ted George is the Chief Narrative Officer at Clio's Advisory in the UK. And on the global oil market, prices rose for a fourth straight day early today as Goldman Sachs estimated the market is in deficit and a new storm started building in the Gulf of Mexico, putting crude on track for a weekly gain of about 10%. Brent crude was up 0.6% at $43.57 a barrel, while U.S. oil futures gained 0.6% to $41.20 a barrel. Both contracts dipped at the start of the day but have risen sharply this week after Hurricane Sally cut U.S. production and OPEC and its allies laid out steps to address market weakness. Goldman Sachs said in a new report that recent storage on oil tankers of crude for future delivery was driven by transient inventory allocation dynamics rather than a rise in global stocks that would suggest the market is oversupplied. And that's a wrap on the program for today and, of course, for the week. Thank you for being part of it. I'm Chimezi Obi.